Redcloud Financial Services is your preeminent source for mining industry opportunities. The team provides a unique, tailored marketing program dedicated to reaching the right people from its mining-focused global network, giving clients access to industry-leading events and conferences, retail and institutional marketing, plus an in-house growth-driven digital agency. Redcloud Financial Services has access to some of the mining industry's most notable companies and CEOs.
Hello and welcome to this live core conversation brought to you by Redcloud Financial Services. I'm Mark Bunting, the host of RCTV. We are taking your questions today. As always, if you have any, put them in the right-hand side of your screen in the comments section, and we'll get to as many as we can. Now, our guest today is truly a legendary miner and company builder. He was inducted into the Canadian Mining Hall of Fame this year. He is Frank Giustra, the CEO of Fiore Group. He's the co-chair of the International Crisis Group, and he is a noted global philanthropist. Frank, let's bring you in here. Great to see you. And
hey, Mark, how are you?
Excellent. Thanks for joining us.
My pleasure.
So let's dive right in. For many years, you've been describing what you call the Great Reset, which would involve a new global monetary system, a move away from the US dollar, a prominent role for gold. So what is the Great Reset as you define it, and where are we in that process?
Well, yeah, as you've mentioned, I've been talking about this for many, many years before it was a popular idea. And the most feedback I got in those days was a lot of eye rolls. It's now becoming a reality where people are talking about it, important people. And it started with the de-dollarization process, which began shortly after the financial crisis, but it's gaining steam, a lot of steam now, specifically with the debt crisis that's facing the United States today. And that combined with the weaponization of the US dollars using sanctions accelerated the process of de-dollarization. And now you've got the tariff wars, you've got this big, beautiful bill, which I think is going to get passed today. Today's July 3rd, and I think is going to get passed today. And that's just like, in my opinion, adding dynamite to an already dumpster fire that exists with respect to the US dollar. So all of this is happening while China and the BRICS are building a mirror system to the existing global financial system. And that includes everything from pay to settlement to depository insurance, anything, rating services, and even currency swap arrangements, all of the things that the Western countries created after World War II is now being copied in a mirror system by China and the BRICS. And I suspect that there's a reason for this. I mean, and there's more of a plan involved, which involves gold, which is what everybody here is interested in, I believe. And so you couple that mirror system with the de-dollarization, and then you accept the fact that all of those countries that are selling their dollars, their US treasuries, are the same countries that are buying gold. And now at an accelerated rate. The purchase by central banks really started in earnest about 15 years ago. And over the last 3 years, it's really accelerated. And I suspect by all the bank surveys that have been done, central bank surveys, that the plan is to continue to de-dollarize and add gold to the gold reserves. I suspect that there is a function outside of just replacing the US dollar with gold. There's a function to this accumulation of gold, and that is to use it as a what I believe will be a net settlement asset in bilateral trade. And let me explain how that works. I'm sure you've heard of the M-Bridge project by now, and that's a project that was started 4 or 5 years ago by China, Thailand, The UAE, Hong Kong originally had the Bank of International Settlements involved, but they backed out just last year, I suspect, under U.S. pressure. And recently, Saudi Arabia joined the Enbridge project. And what it is basically central bank digital currency transactions and settlements done ledger to ledger between central banks in order to settle trades outside of the US dollar system. So they're using their local currencies defined as central bank digital currencies. And that test has been working. There are 31 observing countries now watching the Enbridge project, looking to see how it works out. But at the end of the day, it's my theory, and I'm not alone in this. There's several other people that have talked about this, that gold, because they're accumulating gold, there will be a purpose to that. And that purpose is because one of the biggest criticisms of central bank digital currencies using local currencies was that folks would say, well, what are these countries, the surplus countries, going to do with unwanted currency? Say, for instance, what's Saudi Arabia going to do with a whole bunch of unwanted yuans if there's a trade surplus by Saudi Arabia? Well, the answer is that you can net settle with gold. And that, I believe, is the purpose. And I think that that's been validated by the fact that China is now has set up the ability to trade yuans on the Shanghai Gold Exchange for physical gold. And they've set up a warehouse in Hong Kong where that physical gold can be delivered if people want to take delivery. And they've talked about setting up these warehouses in other regions of the world. I suspect that probably Saudi Arabia will be next. And so you've got a mechanism now that will be able to trade outside the US dollar system and allow the use of gold to enter the monetary system. And that's where I think we're heading.
All right, that's a great table setter for us. And let's stick with China. Goldman Sachs believes that that country probably holds about 10 times the official amount that it actually reports of gold. So do you believe that number? And what else is China preparing for here?
Well, not only do I believe it, I've been the one that's been saying that for the last 7 years. Mind you, I didn't get as much press as Goldman Sachs has gotten, but I've been saying that there's at least 5 to 10 times more gold held by Chinese institutions, undeclared, not official reserves. And there's a simple reason that we believe that, and we've watched the physical flows of gold from the West to China for the last almost 30 years. And you think about it, in just the last 30 years alone, 50,000 tons of gold has moved from Western vaults to Eastern vaults, mostly China. And you think about it in these terms: China is the biggest producer of gold in the world, the biggest importer of gold in the world. It doesn't allow the exporting of mined gold outside of China. Where is all that gold going? It's not all going to retail investors. I suspect, and I've always said this, that there are a number of Chinese institutions that hold that gold. They don't want to declare it for obvious reasons. If you're accumulating a position of something over a number of years, the last thing you want to do is show your hand. So they've been accumulating quietly, covertly, and undeclared. And I suspect that at some point, likely when they have a need to disclose how much gold they have, they will disclose it, but not before. And so I think it is tied to the Enbridge system, and you're already seeing the setup of the infrastructure to use gold. And I think it'll happen, and probably in the next 5 years or so, you're going to see a system that is declared and used by the BRICS nations, where gold is used for net settlement.
Now, you touched on the U.S. and their debt and deficits. You say the current numbers are just insanity. And then you've got the big, beautiful bill, so-called, which, as you said, is likely they're going to get signed into law today or tomorrow on July 4th, Independence Day. So this, it's been estimated, will add trillions to deficits and debt in the United States. The debt ceiling is going to go up $5 trillion. So what will be the repercussions ultimately, do you think, of this of this bill for the dollar, for gold, inflation?
Yeah, I think there's going to be a number of repercussions, and when you really just look at the numbers. I mean, it's all we were already on a path to perdition with respect to the ongoing deficits, which were running at $2 trillion a year, and I suspect this year, 2026, will be even higher than 2 trillion. Then you add in the additional deficit caused by the big beautiful bill, and the numbers start to get ridiculous. In 10 years, we're going to have between 57 and 60 trillion dollars of federal debt. That's an insane number. I mean, 57, 60 trillion is a crazy number, and it's unsustainable. And I think that you're going to see several things happen. First of all, politically, I think the MAGA base is not going to be very happy. You know, you're giving a tax cut to the wealthy. You're taking away a number of services, Medicaid, food stamps for the poorer people, and you're increasing military aid. You know, and Trump's platform was all about, cutting back on foreign wars and all of that. Now you're increasing military. And I think that that's not what MAGA voted for, but, that remains to be seen. So that's the political part. The financial part is the part that worries me the most. I mean, you've got, what Elon Musk and Rand Paul and Tom Massey are saying is not wrong. That, this bill will help bankrupt America. And as Musk put it very clearly, he said, all the politicians know this. They know that they're creating a fiscal crisis, but they're all whistling past the graveyard. They don't care. And they're under a lot of pressure from Trump to get this bill passed. And Trump's doing an amazing job of getting everybody to fall into line. And, and we're going to get this bill, and it's going to just add to an already existing problem. And it's simple math. I mean, really, you don't need to be a PhD in math to understand how this is going to bankrupt the country. And there will have to be, as I expect, some kind of reset. And I'm not, there's many ways the reset can play out, but there's going to have to be a reset to deal with the fact that you're going to have to probably inflate this debt away. And, that's pretty much the playbook that every country throughout history has done when they run into this problem. That's nothing new. They will just have to print it away. And that's what I expect will happen. It might even be forced upon the U.S. when they run out of buyers for their treasury bills. Already with the de-dollarization happening, we're losing the bids. The most reliable buyers of U.S. treasuries were Japan and China. China's been selling for national security reasons, and Japan is selling because they have their own fiscal and monetary problems, which are now just coming home to roost as the yields, Japanese bond yields, are starting to rise. So there's going to be a lot of repatriation of U.S. of currency, and they're going to have to sell U.S. Treasury. So I think you've got all these factors, and at the end of the day, who's the buyer of last resort? And we've seen it before in the last 15 years. It's the Fed. The Fed will have to be the buyer of last resort. And what does that mean? It means some other name they're going to have to find for QE, which is always about money printing. And believe me, they'll find a new way they'll call it something different, but it's going to be money printing. And it's going to create a vicious cycle. And that in turn is going to drive the 10-year bond yields up when that starts to happen. And then that means that the Fed will even have to provide more buying, which creates a vicious cycle. And at some point, everybody has to run for the exits. And this is really a crisis. And I just don't understand why they're allowing this to happen. But there you are, politics. They're letting it happen. They're trying to promote the idea that we can grow out of this debt problem. That's mathematically impossible. That's just politicians talking. They will never grow out of this problem. It's the numbers are just too big. And so I think that you're going to see, the day of reckoning is coming. And how it plays out exactly, I really don't know. But I can assure you that the value of the dollar is going to go down, the value of gold is going to go up.
Okay, in a while, we'll get to a question from one of our viewers, Scott Douglas, along those lines of what you're talking about, inflating away the debt, what the Fed might do, et cetera. But from an investor standpoint, you said that when the you-know-what hits the fan eventually in a crisis, investors need to be protected. They need to prepare. need to be diversified, and of course, own some physical gold. And you've been hinting at, and it's hard to pinpoint it exactly, but how will this, maybe just flesh out more how all of this will manifest itself, the Great Reset, and what sort of time frame are we talking about, do you think?
Yeah, timing is always difficult. Timing is always difficult to predict. I try and stay away from timing, although I think it's happening a lot quicker than anybody anticipated. It's now accelerating. The process is accelerating, but I'll use the word. You wouldn't even use the word. When the poop hits the fan, what you want to be is not directly in front of that fan. Okay, and as I said, you can't really predict timing or the exact outcome of this crisis, but you should be standing as far away from that fan as possible. And what does that mean? That means you have to play defensive. And so what does that mean to me? And everybody's got a different strategy, but defensive to me means you don't buy overpriced US equities now. I mean, they're the most overpriced they've been in history. And it's a bubble. And bubbles tend to burst at some point. And again, can't predict the timing. You'd stay away from the longer maturity bonds. Inflation is going to come back. They print money, they do all these things, they create debt, print money, and it creates inflation. So stay away from long-term bonds. Be geographically diversified. I look at emerging markets. If I want to buy equities, I don't buy North American, Canadian, I don't buy US equities. I buy equities in other countries that have good value, pay dividends, and be skewed towards hard assets, commodities. Because as the dollar starts to get devalued, you're seeing it already. Commodity prices start to go up. So be invested in commodities, metals, energy, etc. And the best hard asset of all is obviously gold. You have to own physical gold. And I'll say that again, physical, not paper. Because in a crisis, that paper gold, I can assure you, will not be there when you go to grab it. So make sure you own physical gold and have some cash around. You need some cash because you don't know what's going to happen. So, if the markets fall apart, you need to have cash to survive and to take advantage of falling prices, which they will fall. And that's basically it. I think you really have to kind of manage it the best you can in a defensive posture. That's my advice. And because you have to be diversified because none of us can predict. There's so many possible outcomes to this mess, and it can create all sorts of problems. You can have capital controls established by the United States or in other Western countries, and that's happened in many countries around the world. That means you cannot take your money out of your home currency into another currency. You cannot export your money out of the country. Capital controls will prevent that. So I think you have to be pretty smart, pretty astute, and be diversified. Make sure you have access to some cash.
So hold cash at home, hold some physical gold. Would you go so far as to say that people they should have a bunker and a shotgun and some gasoline and canned goods?
Okay, well, listen, anything's possible, okay? And the worst outcome of a crisis like this, as we've seen throughout history, is war, okay? These sort of, when trade stops, when major economies collapse, when there's any kind of a financial crisis, countries start to look inward, nationalism comes into play, and now you've got a rivalry between the United States and China, and that's what my worst fear is, some form of global conflict. And I pray for our children, our grandchildren, that does not happen, but there will be a lot of turbulence. So what do you do? Okay, well, yeah, you can be part of the guns and the guns and gold and bunker mentality with all of that. That's the extreme. But I would say at the very least, you should have. By the way, you should have some resources at home that might be useful. And we learned this a bit in COVID. Have some canned food. I like tuna. I like chickpeas and Dominica Fury olive oil, of course, because you need that to make it taste good. But cash, have some physical cash at home, and obviously gold. Cash, because as we saw in Spain a few months ago, when the power went out, nothing worked. You couldn't use your phones, you couldn't use your ATMs, you couldn't buy anything at a store. So you had to have either cash, you need cash for that, and you need physical gold in the event that a real crisis hits and they put in capital controls or do bail-ins. The banks do bail-ins to steal your money, which is part of the Frank-Dodd Act. It's legal. They can do it if we get into a crisis. So you need those, the ones to store your wealth and one for just buying day-to-day things.
Frank, you probably saw the other day that the state of Texas in the U.S. has declared gold and silver as legal tender. So do you see that as sort of one more sign, one more symbol, a domino in the whole Great Reset?
Well, Texas is not alone. You've got several other states, Louisiana, Utah, Wyoming, and Arizona, that have made gold legal tender. And there are a number of states that are trying to get a bill passed and approved to make gold and silver legal tenders. That's happening. And my question, this is what I wonder. What happens, though, when there is a crisis, a US dollar crisis, and say all of these states that have approved gold and silver as legal tender, their citizens sell their dollars and rush to gold and silver? What is the federal government going to do? How are they going to react to this? And you can rule out the bait and switch that they did in 1933, where they confiscated people's gold or asked people to turn to gold and then immediately devalued it by 69% and screwed the American public. So that's not going to happen. But, if there's a tussle between the federal government and the states on this issue in a crisis when they're trying to defend the dollar, that could lay the groundwork for some kind of civil unrest, civil war even. I just don't know. I mean, I don't want to alarm people, but you have to ask yourself that question: what happens if? And I'm not sure how many people have thought that through.
A key deadline happened a couple of days ago on July 1st. That it didn't really get a lot of media coverage, but that involves the Basel III regulations and gold now being a tier 1 asset versus a tier 3 asset, meaning that banks can include gold as part of their reserves now. So how impactful could this be, do you think, in terms of demand for gold and the price as well?
Yeah, well, first you have to understand there's a distinction between being a tier 1 asset, which allows the banks to use gold in their core capital at full value, at 100% value. Whereas with Basel I, it was at 50% value. You can only use 50% of the value of the gold you own. So that's great. That's great. That's going to mean more demand by banks to have gold as part of their capital, which includes treasury bills and everything else. But there's also the high quality liquid asset test, which at this stage, and it's been really hard to get a handle what the truth is, because obviously the LBMA banks have been very good at obfuscating the truth here. I mean, they're certainly not the most transparent players in the gold market, and I'm being kind. But to be, I'm not sure whether for the purposes of liquidity coverage ratio, that gold is yet accepted by the U.S. banks for that part of their structure, and that means that they can discount gold by 15%. I think they can only use 85% of the value of their gold for the liquidity cover ratio. So that's how that works. Now, in terms of where we're at in the process, I think that the fact that July 1st date was coming has already been priced in. And one of the reasons I believe that is because I'm sure you saw, starting last December and for the first part of this calendar year, an amazing amount, an incredible amount of gold, physical gold, was coming into the U.S. from London vaults. And there were a number of theories about why that was happening: to avoid tariffs when the tariffs came in, all sorts of things, to fill Fort Knox, because gold wasn't there. I mean, I heard all sorts of theories, but what I think it may have, the reason for it would have been to be able to use gold as a tier one asset in their core capital. So I think that's already priced in, but it certainly does now make gold a much more important asset. And institutions outside of the major banks, other institutions are going to have to start seeing it that way as well. So I think you're going to see a continued interest in gold purchases by institutions and investors and other investors that now see gold the equivalent of cash. And that's basically what it means. The gold is the equivalent of cash, which it should be, because gold has always been money. As much as they've tried to deny it, gold has always been money. So now it is going to really be part of the monetary infrastructure. It's no longer fringe theory, the whole idea that gold's being monetized. It's part of the infrastructure going forward. It's going to be the anchor. Gold will be the anchor for central banks. And it's already surpassed the euro as a holding in central banks. So now it's the dollar first, gold second, euro third, in terms of holdings. So I think that trend will continue. And eventually gold will be incorporated into the monetary system, whether by the US or by the BRICS, we'll have to see.
Further to that point, I know you're familiar with Judy Shelton. You may even have met her or know her. She is one of the names being thrown around as a possible replacement for Jerome Powell at the Fed. She also wrote a book called As Good as Gold. And one of the main things she said in that book, that she really advocates for a long-term U.S. Treasury bond that is backed by gold. So what are the probabilities, do you think, that ultimately that would happen?
Yeah, I know. I'm very, very familiar with her work. She's been touted as one of the candidates for Fed chair, but she's only polling around 13%. And I'm pretty sure that Trump would rather have a Fed chair that will take interest rates down to 1% rather than a sound money person, which Judy is, a sound money person. So I'm not sure. I don't think she's going to make Fed chair. But even so, you have to think about what would be required before this idea of using gold to back 50-year bonds. What would that require? Well, you have to do two things first. First, you have to audit Fort Knox. Okay? And there was a lot of fanfare after the election. Trump, Musk, and others going, we're going to audit Fort Knox. We're going to audit Fort Knox. And then we've been distracted with trade wars, real wars, ICE raid protests, Diddy, Epstein files, you name it. We've heard everything. And all of a sudden, the talk of an audit of Fort Knox has disappeared from the discourse in the United States, never to be heard again. And that, first of all, I think is a bit weird, but that's where we are. So you'd have to audit the gold reserves first. Next, and this is a more interesting point, you'd have to revalue the gold holdings that the Treasury has from $42 an ounce to market price, which is currently around $3,300. And the U.S. has been a bit reluctant to do that because it does two things. It underpins the value of gold at the current market. Okay, so if the U.S. revalued, that's basically underpinning gold. At least that's the floor where it's trading now. And more importantly, it's kind of a vote of no confidence for the U.S. dollar. It's a way to admit that gold has value, which they've always tried to educate us that it doesn't. Since we went off the gold standard in 1971, they've told us that it's an ancient relic, it's not necessary, it's this, it's a pet rock, it's whatever, it shouldn't be, it's worthless. They would have to admit that it has value, and so that would change the dynamics of the system, and people would start to think, oh my God, gold has value, and then you see a lot of investors buying even more gold. So those are the two reasons that they're reluctant to do it. I think at some point they're going to be forced, either by their own internal circumstances and fiscal situation, or if the BRICS come together eventually. I don't think it's going to happen soon, but if the BRICS eventually come together and decide to use gold as a backing for a BRICS unit of currency, which I think is down the road. But at some point, someone's going to make it happen.
Now, one thing U.S. Treasury Secretary Scott Bessent has talked about is possibly monetizing the U.S. Gold pile, which is something close to $3 trillion, $750 billion or so. Do you think they may do that, and what would the implications be there?
Yeah, I think that's a possibility. As you say, it's only 750 billion. I know that's a big number, but when we're talking about, $2 trillion plus deficits every year and a current $36 trillion debt pile, I'm not sure, how much that's going to help. I'm sure every bit helps, and I'm certain that Scott Bessent is thinking of gold amongst other nationally held assets to find ways to monetize these things. But gold on its own, I just don't know. I think it's a great idea, but I just don't know how much of a dent that's going to put into the debt problem and deficit problem. At the end of the day, they have to, and I'm saying it's impossible, but at the end of the day, they have to cut their costs. I mean, that's just a fact that they're not willing to face, because, as we all know, between discretionary spending, military spending, and interest costs, that's 86% of your federal budget. The rest is the only part you can touch, really. And I don't think anybody has the appetite, as you've seen with this big, beautiful bill. It's not really cutting costs. It's cutting taxes, cutting revenue, but it's not cutting costs. The willpower is just not there.
Frank, shifting gears here, you have a number of investments in precious metals and metals companies such as Next Metals, Argenta Silver, Next Gold as well. We know you like the concept of buy and build. So do all of these companies, Aris is another one, do all of these companies fit that criteria? Is that one of the main reasons you're invested?
No, not all of them. Some of them do. I've invested in a range of producers, developers, and explorers. Okay. With the producers, the buy and build strategy works. So Aris Mining, which we launched about 4 years ago, is utilizing the buy and build strategy, which we did with Goldcorp, Endeavor Mining, and Leah Gold in the last 25 years. So that works there. But for the others, the developers, West Red Lake is another one. It finally went into production. We bought that out of bankruptcy and fixed it. I think it raised a couple $100 million to get that back on track. It's just gone into production. And I know for a fact that, the CEO has ambitions to acquire other assets and build. So that works there. Then you have the other types, the developers like Next Gold, which has 2 very large deposits in Canada, almost fully permitted on both, one in Ontario, one in Nova Scotia, total of 6 million ounces. And I know that the management there is moving to put the first one into production hopefully soon, and then look at the next one. So they have to develop their assets first and put them in production. And then you have the explorers, Argenta, Copper Giant. So Argenta is the silver project in Argentina, which is very high grade primary silver play that I absolutely love, because I think it's a much bigger system than it's been currently defined. And then there's Copper Giant with the Macoa project in Colombia, which is probably the most unloved of all of these stocks. It's been sitting there. I keep putting money into it, sitting there around 20 cents. We've just put 2 rigs on the property. We believe that this is a copper moly project. We believe it's currently around 650 million tons. We believe it's a lot more. It could be a lot more. And we're trying to test this mineralized zone area to see whether we can get it up over 1 billion tons. But it's the mineral system, and I'm not a geologist, this was explained to me, but the mineral system had 10 million years of mineralization taking place, which is almost unheard of. You see this in the very, very major deposits. There was a long time period where the zone was mineralized. So we're trying to see how big the system is, and I'll keep supporting this until we can make a case that it's a lot bigger than it's currently defined. So I've got all sorts of things, and what I look for is always start with management. If you don't have the right management in place, they can you can have a great project and they get screwed up. So I've had the pleasure of being around, or the privilege of being around long enough that I've had an opportunity to work with certain people time and time again. And I love working with the devils I know, Neil Woodyer, Ian Telfer, I've worked with them for a long, long time. I know what I'm getting. They're very good at what they do. And then occasionally I test new management and see how they make out. But yeah, and so it's mostly about management, finding the right assets. And we also are very good at identifying distressed assets that are going through a bankruptcy or a restructuring and acquiring them for very low value. We did that with West Red Lake. We did that with Argenta. We did that with Nex Metals, which is our big copper nickel project in Botswana. All of these were troubled companies, too much debt, wrong strategy, doing everything wrong. We come in, we clean it up, restructure the board, restructure management, create a new strategy that makes more sense, get rid of all the debt, convert it all into equity, recapitalize it, put in enough capital to make it work. And we, I think just the other day, we announced that we're doing the Mento copper project in the Yukon through a new company we call Selkirk Copper. And again, that was coming out of bankruptcy. We're going in there. We're going to take a different approach to it and try and get it back in production over the next number of years.
A couple more questions from me here, Frank, and then we'll get to viewer questions. You talked about Copper Giant, which used to be called Libero Copper. Is there anything else you want to add aside from the fact that I'm sure you think it's wildly undervalued, a $16 million market cap?
Yeah, no, like I said, it's really unloved. I think a lot of the copper porphyry projects in Latin America are facing similar issues. I think what scares people away is the cap costs of putting some of these like 1 billion ton projects, 2 billion ton projects into production. But the way I see it is, and again, it's risky. We're drilling, it's exploration, but geologically, there's a case to be made that if we drill enough holes in this thing, we'll be able to define something that's a lot bigger than 650 million tons. And the type of grades that they're pulling are really good grades. And at some point, it will get some love for the market. In the meantime, we're funding it with our own money. It's really our internal group, that's myself and several others, that keep putting money in when it's needed. And I'm happy to do that all day long, because eventually, and monitor it as we move forward. And yeah, I think at some point, if we're right about the geology, it'll pay off.
We have seen a disconnect for a long time between the price of gold and gold stocks, which is narrowing. But would you still say that from an historical standpoint, gold stocks are still fairly cheap?
Yeah, absolutely. I mean, the majors have had a pretty good run. And even the junior producers, and I've invested in a few, have had a pretty good run, but nothing compared to historical valuations relative to the gold price. I mean, we're not even near a bull market yet. And as far as the developers and explorers go, they're getting no love whatsoever. It's very difficult to get market action in some of the developers. And I'm thinking of, our own next gold project in Canada. We can raise money. There's money. The nice thing is that what's changed in the last 6 months is now you're starting to see money coming in from the investment banks are raising money. It's not as difficult as it was the last couple of years. You're seeing more and more financings, but we still haven't seen the price activity in some of these juniors. That's still to come. I think we're really early in the bull market. You think about just the interest in gold itself. I mean, someone gave me a statistic. In 1980, 2.7% of global assets were invested in gold. Today, it's only 0.5%. If we ever went back to those numbers, it would require the purchase of an additional 243,000 tons of gold.
All right.
So I think we're early. That's bottom line. We're early. I've been wrong, by the way. I'm going to admit I've been wrong. I thought that we were going to get the run in the mining stocks, the gold players, a lot sooner. It didn't happen. It's beyond me why. I've had a couple of theories, but it's now starting to happen. And I think the higher gold goes, eventually people are going to start to pay a lot of attention. You've got an incredible situation with the producers now. You've got oil prices, which is the biggest input cost, down, and the gold price, which is your revenue, going way up. These margins, and I know this from my own involvement in a couple of these companies, the margins are incredible. They're cash cows. They're printing money. And so I think eventually the U.S. investors are going to switch from, say, crypto, which has been their flavor of the month for quite a long time, and start looking at gold.
All right, Frank, on to some viewer questions here. We have a handful. I mentioned Scott Douglas. The gist of his question is, do you think the Federal Reserve will eventually be forced to cut interest rates in lieu of the debt situation? And also, I know you don't like timing anything, but he's asking about the possibility of $4,000 gold, $5,000 gold. Mm-hmm. Is that in the offing?
Well, I think definitely Trump is going to get his way. At the very least, by May of 2026, when the Fed chair switches out, he's going to appoint somebody that will do what he asks. And what he wants, and he's been very clear about it, he wants interest rates to go back down to 1%. Okay? And I believe he will get it, regardless of how the market's going to react. Now, that's going to juice the markets, but it's certainly going to be a problematic for the 10-year yields. There's, the one thing the Fed can't control with interest rate policy is the longer term bond yields. In order to influence that, you have to buy them, print money. So here's my prediction. Trump will get his way. There will be a new Fed chair. I think that, by the way, even Powell will start bringing down rates shortly, a little bit at a time. But he's probably got in mind a couple of cuts this year. But the next Fed chair will do as he's told, in my opinion. And you're going to see the Fed will have to, I think that's going to spook the bond buyers around the world. They're already spooked. They're going to be spooked even more if that happens. And then the Fed will have to come in to manage the longer term. They're going to have to buy the bonds. And that means printing of money. And that creates another vicious cycle. And we're going to be back to basically higher inflation. I think that's coming, and possibly stagflation. Because we are heading into what looks like a recession. I mean, by all accounts, if we look at all the metrics, the economy is weakening fast, and there are a lot of alarm bells going off in terms of the debt of U.S. credit card debt, mortgage delinquencies, commercial real estate. So I think that's going to be problematic. Now, timing is your second part of the question. I've never, ever, ever predicted the price of gold. People have tried to make me, it's a fool's game, okay? All I can tell you is that it's going to go, in my opinion, it's going to go a lot higher. And you might be surprised how high it goes, like really surprised. And I'll give you an example why I believe that. Between 1971 and 1980, gold went up 27-fold. Between 2001 and 2011, it went up 8-fold. So here we are today. Let's say the bull market started when gold broke 1900, okay? So you apply those multiples somewhere between 8 and 27 times as we're going through what I believe is the third phase of the great gold bull market, which started in 1971. Pick a number. And so nothing would shock me, but I wouldn't predict it.
Fair enough. West Red Lake Gold is one you mentioned a little while ago. A question here from R. Raphael. Is there any danger of too much dilution for shareholders?
Yeah, dilution is always a problem. And listen, I hate dilution. And I got a lot of nasty tweets when West Red Lake had to keep going back to the market to raise additional equity. It took a lot more capital to turn that thing around and get it back in production than I originally thought. And, obviously you try and, as a big shareholder, the last thing I want to do is dilute. So, but we didn't have a lot of choice. The previous management had rushed this thing into production. There was so much development that needed to be done that they just didn't do. And we had to do it, and it costs a lot of money. So I hate dilution, but sometimes it's unavoidable. So, you have to always ask yourself, as someone that's guiding a CEO, what's your choice? Either you dilute or you take on very expensive, dangerous debt, or you sell streams that, takes away the economics. Yeah, you have to find a balance in your financing structures, but sometimes you just have to raise more money than you expected, and that's you're faced with that. It's Sophie's choice at the end of the day. What do you do? Do you dilute, or do you take on terrible debt that's onerous? So yeah, it's tough. And Western did dilute more than necessary, more than I predicted. I mean, and but here we are. Now you have to calculate what's the value going forward as they move to full scale production, and then build from there with additional M&A. And I think that's their plan.
All right, a question from SS. They've written a little novella here, so I'll summarize it. The crux of it is Bitcoin versus gold. Bitcoin during geopolitical risky events doesn't tend to perform very well. Gold often does. So can you argue that Bitcoin is growing up? It's very much supported by the U.S. government, and that at least as an alternative, maybe not versus gold, but just as another alternative, that it can work, or no?
Yeah, I think I've been misunderstood. I never had a problem with Bitcoin. Okay. So I want to make one thing very clear. Okay. It wasn't that I had a problem with Bitcoin. I had a problem with what the Michael Saylors of the world were saying, especially Michael Saylor, who's obviously the guy behind Strategy, which has been using all this treasury to buy Bitcoin. I mean, quite honestly, he said something a couple months ago, and he keeps saying these very dumb and dangerous things. Number one, that gold is the king of garbage investments. He actually said that. That's got to go down as the dumbest quote of 2025. The crap that comes out of his mouth would make Jordan Belfort blush. He is literally saying stupid and reckless things. Bitcoin's going to 13 million a coin. $500 trillion of global assets are going into Bitcoin. Everything's going to go into Bitcoin. Bitcoin solves every problem that this world has produced. It's ridiculous stuff, and that bothers me. But in terms of the question that's being asked, so far, I know what the aspiration is by Bitcoin holders, that it is an alternative to gold. Okay, I get that. And they obviously talk about, it's limited supply, so it's fixed supply, and that's fine. But so far, if you just look at the trading activity, its correlation to gold is not the same. Gold behaves a certain way when certain things happen, when markets go up, markets go down, when there's geopolitical risk, when gold goes up, Bitcoin is not going up at the same time. Bitcoin has so far gone up when the markets are buoyant. And I think that if that might change. Now, what they're doing lately is, and again, led by Michael Saylor, but now there are countless companies creating Bitcoin treasury buys. So everybody's trying to buy Bitcoin at the corporate level using debt and equity to try and tighten that supply. But, they've been doing this for a while. And I'm just a little bit curious what people think. Bitcoin, despite all the buying that's come in from these treasury buys, it's churning. So someone's selling. Okay. And I'm not sure, I don't know who that is, but someone has been selling a lot of Bitcoin. And I suspect that the investing public that got in early is using this $100,000 price to get some liquidity, make some profits. So again, will Bitcoin ever be the equivalent of gold? I don't think so. And it's for one really major reason. Central banks are buying gold, a lot of it, all over the world. And they're, listen, call me old fashioned, but I just been around long enough to know one truth. When an asset class is being heavily promoted on the mainstream media with shameless promotion, relentless promotion, screaming at the top of their lungs, you have to buy it. It's all over the social media. Buy Bitcoin, and they'll give you all the reasons why. When there's that much noise and effort put into promoting something, and you compare that to another asset class, which is being quietly accumulated and covertly, in places like Saudi Arabia and China, buying it secretly, I know where I'm going to place my bets. Okay. It's just been around long enough. Okay. I think Bitcoin is very heavily promoted. Now, it may achieve the end goal of being gold, but it's certainly not there yet. And I like to sleep at night. So gold to me is my preservation of wealth. No matter what else happens, it preserves wealth. Bitcoin is being promoted as making money, to buy it with fiat and sell it for fiat. That's how it's being promoted. Despite what they're telling you about its goal, people are buying it because of the greed factor. When you have all these people saying it's going to this price and that price, going to the moon, it's going to the stars, that's hype. And I don't like hype. I like to buy things that are being quietly accumulated, not heavily and shamelessly promoted. So that's my whole spiel on Bitcoin. I'm sorry to any Bitcoin holders out there, but that's just my honest assessment.
All right, that's a great answer, Frank. James Privé and then Joel Perks have a similar question here on Aris Mining. After the Marmato complex underground expansion is complete, which will be the priority? Will it be Soto Norte in Colombia or Toroparu in Guyana? And will permitting take a while?
Yeah, so that's a good question that I'm not in a position to answer. Simply because I'm an advisor to Aris, and they have to make decisions and tell the market what their plan is. I know their Toro Peru is under a review right now in terms of a new feasibility study, new numbers. Soto Norte was delayed with this moratorium, which will expire next year. We'll probably see a change of government next year in Colombia. I think the opposition, certainly Soto Norte, which is an incredibly valuable asset, very high grade, and like 7 million ounces or so, very high grade, should be the next project. It's certainly, the company would love it to be the next project, but we're going to have to wait till that moratorium is lifted. But certainly the local community, all the local mayors and the governor of that province are very much for it. They've been supporting the Soto Norte project. It's really the federal government that's obstructed it for about another year. So in the meantime, they'll just continue to do their studies. So which comes first, I don't know. It depends. But they're both great projects with millions of ounces, and eventually they're both going to go in production. Aris has 30 million ounces in the ground. 20 million of measured and indicated, another 10 million inferred. That's a lot of ounces. And it's mostly very high grade, with the exception of Toro Peru, which is open pit. But they're really high grade. I think Segovia is the second largest high grade mine in the world. And they have long mine lives. So yeah, Aris, I love Aris. I think Aris is my primary gold mining company at the moment.
All right, here's an interesting one from George Foster. And doing the math, I think you would have been maybe 10 years old at the time in 1971. But did you buy any gold when it was $35 an ounce?
I was mowing lawns for 50 cents an hour. But I'll tell you a good story. I didn't buy my first gold bullion until 2001, when it was around 250, 300 an ounce. That's when I really loaded up. And then I bought again in 2018. I've never sold any of my physical gold. I just refused to sell it. But I'll tell you an interesting, if you want to talk about being 10 years old, I came from Argentina. I was in Argentina till the age of 9. My father had a couple of businesses in Argentina, and in the mid-60s started to see the writing on the wall that it was going the wrong way in that country, and he wanted to get us out. So he moved us to Canada in 1966. And then he tried to sell his businesses to get his money out. He got into some dispute with his partners, so he didn't get his money out in time. By the time he settled the case and received his money, hyperinflation had set in, and all that money worth zero. And I mean zero. It had zero value because it had gone, Argentina went through, 1,000% inflation. So it was wallpaper, toilet paper. It was worthless. Very valuable lesson. It took my dad a long time to get back on his feet. He lost everything to hyperinflation. And what happened in Argentina can happen elsewhere. People don't think that that's possible, but you just look at the behavior of these in the piling on of debt and deficits. It's going to happen at some point.
I remember you detailing that in our one of your keynotes at a Redcloud conference. It really is fascinating to think that you were actually you lived through it. Quite something. Okay, last question here goes to Adrian Cantwell, and apologies to anybody who asked a question. We've only got so much time. I was trying to be selective here. Adrian Cantwell, are there any jurisdictions that you always avoid, no matter what?
Yeah. Listen, things can always change. Geopolitics are very fluid. But I obviously wouldn't go to Russia. I don't think I would go back to Kazakhstan. I had my experience there. Um, Countries in Africa obviously in the Sahel, Burkina Faso now, and we were in West Africa with Endeavour Mining for a long time. Would I go back there today? Some countries, Ghana, yeah, of course, but Burkina Faso, Mali, Niger, Central African Republic, all troubled spots now where the Russians are influenced the outcome of events there. DRC is interesting. I have never gone to the DRC, but I would certain parts of the DRC, but not certainly up in the north where Rwanda and the DRC are fighting it out with the M23 group. Latin America, I used to do a lot of business in Venezuela. We built 2 gold mines in Venezuela and we had them stolen from us or confiscated. So yeah, would I go back to Venezuela? Not under the current conditions. But most of the world, you have to just price in the security risk and political risk. You price it into the deal. You can do business in countries. It's just you're not going to get the valuation that you're going to get, say, in Canada or elsewhere. But obviously there are a few countries I would never go to.
Okay, one more here I just thought of. I think the first time I heard of you was probably back in the late 70s, 80s. It was an article about you and Yorkton Securities, and they described you going around with your yellow legal pad, and there's nothing that satisfied you more than crossing something off your yellow legal pad and your to-do list. So look back at that, Frank Giustra, to now, and can you even imagine the journey you've had, not to mention Lionsgate and some of the other things that you've done?
No, I'm in the process of writing a book. It should be out late this year, early next year.
Oh, great.
Quite a few years putting this together, telling the story. And as I'm writing the book, it's occurred to me that, wow, what a hell of a ride. And I just can't honestly believe that I had that privilege and that luck. And a lot of it was luck. Okay, it's luck and timing, the right place, the right time. I've been blessed. I've had lots of opportunities. Yes, I'm curious. I try new things all the time. I love working. I love doing deals. I love learning new things. But I've been lucky, and I'm grateful for it. And this book will not only tell that story, but talk about a transition that I went through from being a money-hungry deal maker to switching to philanthropy, which is really most of my life these days, is doing my global philanthropic work, Crisis Group, Accesso, Global Refugee Sponsorship Initiative, Food Intelligence, Street to Home Foundation, homelessness. I mean, I'm involved in so many things, and it makes me happy. It gave me peace. So could I have imagined that back in the late 80s or late 70s, early 80s? Absolutely not. What I remember when I first got into the brokerage business, Merrill Lynch hired me in 1978. All I wanted to do was make enough money to buy a Ferrari. That was my entire goal. I didn't think about a house, an apartment. I just wanted to buy a Ferrari. So that was my motivation back then. And obviously that evolved over the years. And, building a company became more important. The success of Yorkton in the old days, turning that into an institutional boutique and very, very profitable boutique was a great honor. Creating Lionsgate, great honor. Gold Corp, a great honor. I'm glad to have been there working with great people. But yeah, no, I would have never predicted this. I've been really lucky.
Well, that's going to be an amazing book. Will it be an autobiography or more of a memoir?
Yeah, it's an autobiography with a twist. Let's just put it that way. But I'm going to make it entertaining to read. So it's not going to be just, I did this, I did that. It's a little bit more than that. It's going to
Oh
be
yeah,
fun to read.
sure. I'm sure you've got some stories. That'll be
Oh,
great.
yeah.
Last question. That's coming out when, roughly?
I don't know. We just finished the third edit of the manuscript. It's now going out to a few publishers to get their comments on it. I don't know. I've never written a book before, so I don't know how long this is going to take. The guy who's guiding me through this is saying possibly by the end of the year. I hope by Christmas, but it could be early next year.
All right. We'll look forward to that. We can't thank you enough, Frank. Really enjoyed that. You covered so much ground for us. Great insights as always, and we'll see you down the road.
Thank you, sir.
Okay. Adios to Frank Giustra. Our thanks to him. Absolutely. And thanks again for your questions. There are a number of them. We tried to get to as many relevant questions as possible. So keep watching Live Core Conversations. Next week, we have a silver showcase. You're going to want to tune in for that. That is coming next week here from Redcloud. We'll see you then. Take care.